So this is the story of my subscribers trade in Minda stock. I think he must have enrolled in my video course. I don't know. I'm not sure. He has not mentioned it here, but his approach looks very professional. Anyways, in the previous video, we discussed some stock selection. Uh, Siddharth has looked at comparatives. He also looked at technicals. In comparatives, he did not mention the buyer rating. He mentioned the relative strength. He mentioned the industry group rank. He did not mention the buyer rating, like this rating, accumulation distribution rating. This has to be A or B. And he also did not mention the market leadership. So if I click on the sector, I click on stocks, you see 1, 2, 3, 4, 5. I generally look at top 5 because that's where the money is in that sector. So Minda comes in the top 5, which is fantastic. So it's 75,000 crore market cap company. This is not some penny stock. Okay. So liquidity looks fine. Comparative looks fine. Relative strength is good. Industry group rank is good. Uh, Market leadership is there. Accumulation distribution rating is there. I think the improvement in industry group rank is there. I have not checked it, but I hope it's there. So let's check. This is auto truck original equipment. So let's do that. Industry groups. Auto truck. What is that? Auto truck original equipment. Auto truck original equipment. So industry group rank is 30. 6 months ago, it was 81. Check. See, from 81, it has gone to 30. That means the group rank has improved. That means the sector has done well. If I click on the sector, see, a lot of people ask me question about sector and momentum in the sector and all of that. Have a look at this chart. This is the chart of the sector itself. So it was underperforming. It was not doing well, but it picked up later on. Currently, it's in the process of forming a base. The sector itself has gone into a stage two uh, kind of uptrend. So it seems like after the base, it could start to go up. And we can see that in the improvement in the industry group rank. So comparatives is very good for this stock. Liquidity is fine. There is good volume and all. Let me show you volume. No, this is not okay. This is Minda. Yeah, have a look at this. 852K volume and price is in the range of 1300. This is fantastic, right? So volume is there, price is there. So it's not some penny stock. So liquidity is fine, comparative is fine. This video is about technicals, okay? Because now he started talking about the base, 7 points in the base. So he has drawn these points 1, 2, 3, 4, 5, 6, 7. And see where he has drawn the yellow line. The yellow line is at point number 5. It is not at point number 7 because point 8 is not complete. If point 8 would have been completed, then point 7 becomes the buy point. If point 6 is completed, point 5 becomes the buy point. So let me draw this base for you. Okay. So you have to check what's the low of this candle? 1273. What's the low of this candle? 1272. So the low of this candle is below the low of this candle. So his analysis is correct. His way of drawing the base is correct. This is what he saw because on, just a second, on 26th November, he took the entry. So next day after this candle, the next day he took the entry. See, he's written here. Entry on 26th November, full quantity at an average of 1319. He has not disclosed how many shares he's bought. He has not disclosed the position size, which is very good. I don't want you to disclose the number of shares that you have bought. You could disclose your position size in percentage, okay? But don't disclose the number of shares that you have bought, because it's easy for people to figure out what your portfolio size is. So don't do that. Don't share your personal information, because trading is a personal journey. Never share your portfolio details, your return details to anyone. Nobody needs to know what you are doing. This is your personal journey. Okay. Full quantity at an average of 1319. Day closed with a good candle with above average volume. So he's talking about this day. We'll come to that day, but let's first draw the base. Now, before even you draw the base, have a look at this base. There is no green zone closing. There is only one candle that has closed inside the green zone. After that, the stock was pushed down aggressively to a level where it came down and probably going to the red zone. That's not a good sign. Okay, so technically, this stock is not good. It's not acting well. It's not uh, going as per our expectations. Ideally, the stock should do like this. Let me explain. Ideally, the stock should do like this: 1, 2, 3, 4, 5, 6, 7, 8. Ideally, the stock should move like this, and then you buy here. That's the VCP concept of Mark Minervini. He will count all those contractions, okay, and then he will buy somewhere here, okay, or somewhere in this area when the stock is coming out of that base. But look what's happening here. The stock is falling, refuses to come up. So the stock is not ideal. So as a professional trader, you must know what is expected from the stock. And if the stock doesn't do what is expected from it, you just stay away. It's as simple as that, right? I stayed away from Minda, correct? Now, expectations is very simple. Like, for example, you have to catch a flight at 9 o'clock in the morning. You are there at the airport on time, boarding pass, and everything is fine. What do you expect to happen? You expect that the flight begins at 9 o'clock. But if it begins at 10, 11 o'clock, that's a problem, right? You never expected that. So if everything is happening, if you're getting the boarding pass on time, if the announcements are happening on time, if the flight is ready to fly, pilots and everything, the boarding and everything has happened before 11, before 9 o'clock, everything is going as per expectations. But if you reach the airport and they announce that instead of 9, it is going to go at 11 o'clock, that is inconvenience for you. Similarly, in the stock market, you must know what is expected. If you don't know what is expected, then how will you take a decision, right? Whether to enter the stock or not. So what I have drawn here is what is expected. And what you see here is the reality that is happening in the stock. So you need to know both expectation and reality. Okay. So let's draw his base. So two things that he has overlooked. He has not set expectations, number one. He doesn't know what to expect from the stock. Okay. Doesn't mean he's made a mistake. Maybe he's learning, maybe he's a beginner, things like that. But he doesn't know what to expect to happen inside the base. That's number one. Number two, he has not checked green zone closing. There is no price action in the green zone after point 0.2 in the base. You need minimum like 3 to 5 candles. Okay, so that gives you confidence that the supply coming from here is getting absorbed. Okay, but anyways, let's draw the base. Even blue zone is fine, by the way. I am not saying, see, don't misunderstand me, okay? Some of you might say, Rohit, but it's in the blue zone. Why are you um, raising a flag here? Okay. See, I am not saying don't buy the stock. I am saying that the risk of buying a stock in blue zone is more than the risk of buying that same stock in the green zone, because the overhead supply acts as an overhang. It doesn't matter. Yes, the market is uptrend and things like that. I just want you to be aware of the risk. There is nothing wrong in taking a trade here, but You have to get in with the awareness that you are taking risk. Unless you are aware, how will you control your risk, right? So the risk in blue zone is more than risk in green zone. The risk in red zone is more than the risk in blue zone. Now, I don't buy stocks coming out of, like, I don't buy stocks which are in the red zone. Okay. Mark Minervini does it. He calls it something, he calls it low cheat, middle cheat, and normal pacing pattern. I don't do that. I don't play that kind of a setup. But blue zone is fine for me, green zone is fine for me, preferably green zone. Okay, let's draw the base. Point 1, that's point 2, point 3, point 4, point 5, point 6, and point 7. For those of you who don't know how to draw these points, there is a video on the homepage of my channel. Okay, how to draw. This is the most basic thing I have taught to my student. This is, you will not find this is in any book. Okay. So I created this system to simplify this base identification for myself. I did it for myself, and then I disclosed it to the public. Okay. So this is how you draw the base. And that's the buy point coming out of the blue zone. So this is the buy point, which he has drawn correctly, which is the high of this 1317. So 1317. We give it a yellow color. See, even the color coding is important so that you remain consistent. Your analysis remains consistent across your trades. So the high of this bar is our buy point, which is 1317. Let's check what he's saying. Full quantity at an average of 1319. So his buy point was 1317. Okay. But your actual execution price is going to be between 1317 and 1% above 1317. So let's do that. 1317 multiplied by 1.01, which is 1330. So let's draw another line here. This is 1330. So that's the 1% band in which uh, we normally buy the stock. And please understand, this is just for educational purposes, this video. No recommendation, no buy sell, no investment advice. You have to do your own due diligence. Okay. So this is the band in which you're supposed to buy. So 1317, 1330. That's the 1% band. And he bought it at 13119. So fantastic. His execution is proper. Okay. And he entered, see, his entry is here, this candle. So let's move forward. This candle. And he's saying that the candle closed above the buy point, which is fantastic. So that is called as price confirmation. And the volume closed above the blue line, that is called as volume confirmation. So you get price confirmation and volume confirmation both in this trade. Fantastic. I don't know why these balloons come. Okay, I have no idea. I did not press anything here. But anyways, this candle gives price confirmation and volume confirmation. And he noticed that. Look in this email, I think somewhere he mentioned this. Yeah, day closed with good candle with above average volume. So he understands the concept of price confirmation and volume confirmation. Okay. Started forming red candle with above average volume. So I sold 50% midday, 27 November. So he started talking about next day now. So that's trade management. So I want to cover trade management in the next video. I hope you understood the arguments that I have made to help you understand this base. This price action was good, by the way. The stock should have started going up from here. He's bought into the blue zone, so he understands that number one, it's a swing trade, it's risky. Number two, I don't know whether he knows whether he's getting into the stock from the blue zone or not. See, in this entire email, he doesn't talk about the green zone, blue zone, which means probably he doesn't understand the importance of these color codings yet. That is what I want to highlight in these kind of video. This is the reason why I'm showing you emails sent to me, real emails sent to me by real people who are actually applying what I teach in the real market with real money. Okay. This is the reason why the videos that I'm creating are very important for swing and positional traders. Please pay very close attention to what I'm discussing here. This is a very important model to learn. It's a mental framework you can keep in mind. The link to this model is in the description box. Download this, print this, laminate this, stick it to a wall so that you don't forget all of this analysis. When I say color codes, I am talking about the technicals. The liquidity comparative, we are done. We don't need to look at the chart for liquidity and comparative. For market analysis, the market is in a confirmed uptrend. We don't need to look at the chart. Market Smith has already done that analysis for us. Technicals is where we need to spend time. Fundamentals, we already figured out. Fundamentally, the stock is good, right? Fundamentally, we figured out that 6 violations are there out of 12. So it's a swing trade, right? It's not a positional trade. So these 4 departments are done. We need to spend time on technicals. I have not even discussed base count yet. Okay. We'll do that in video number part 3 of this video, where I will discuss base count. I will also discuss trade management, risk management. I could also discuss trade management on the 15-minute chart. So wait for part 3. Okay. I don't want to put everything in one video. Otherwise it will become like a 1-hour video. Okay. Wait for part 3. Thank you so much.